next guest covers internet stocks and just days ago upgraded Expedia for the first time in a decade, raised the price target to $200 from $135. Join us right now to talk about that call and, of course, some of the key mega caps like Meta and Amazon. Maybe we'll even get into Microsoft and all this. Mark Mahaney, Evercore ISI, head of internet research. Good morning to you, Mark. Let's first go Expedia. Given the holidays and given also your call here, you haven't loved this stock, but now you do.
Well, I think three things are interesting about the setup here. First is valuation. It's been cheap for a while, but it's darn cheap right here. It's like practically 10 times earnings. Second is I think you've had a bit of a change in fundamentals, in part due to new management, in part because of easing comps, missed execution steps this year. I think you've got an asset that can show accelerating revenue growth and expanding margins into next year. And third, there's this convergence. This used to be the clear underperformer versus Airbnb and Booking.com in terms of growth. But I think the growth rates for all three are going to converge this next year. And so you've got a 30 PE, that's Airbnb, a 20 PE, that's Booking, and a 10 PE, that's Expedia. The growth rates are converging. I think the multiples likely will too. So that's why we like Expedia.
What do they have to do in terms of picking up market share, though?
I'm not sure they can take up market share. And I don't think you have to at 10 times earnings in order to make money on the stock on the long side. What I find interesting is they did rebuild their tech infrastructure. The history of Expedia is one of a company that's made a lot of acquisitions. They bought a lot of brands, whether that's Hotels.com or Orbitz, historic Vrbo. It used to be another name for it way in the past. Anyway, they bought these assets, but they never integrated them onto the same tech platform. So if they roll out changes, search functionality, maps integration, they had to redo it each time. So it just created a lot of waste and inefficiency in the business. It took them almost years to finally integrate all of the tech platforms, the major brands. They finished that just about a month ago. That should lead to better execution next year. It should lead to a better user experience. That should at least allow them to stabilize their market share.
Let's pivot and talk about Amazon and Meta. But I'm curious if you talk about them in the context of what we're seeing happening with this OpenAI saga and drama and soap opera that's emerged, and whether you think this creates an opening for a company other than Microsoft.
Well, I would think so. I think Gen AI is a big enough of a trend. You're going to have a lot of winners in here, and I know the market's kind of assigned two crowns here, two kings or queens or whatever, to NVIDIA and Microsoft. But this is going to be there's going to be broad-based applications, and I think actually AWS and Amazon are going to be one of the biggest beneficiaries of kind of the infrastructure layer. And I think for a lot of reasons that's been kind of hidden in the numbers, but I think it's one of the reasons you're going to get accelerating growth out of Amazon, and that's the cloud computing part. And I'm going to also throw in the advertising business can accelerate next year as they fully monetize Amazon Prime, and I'm going to throw out the retail business too. I think that can accelerate next year too. It's just a really nice setup for a company that also I think is going to hit higher and higher recorder operating margins and profits in 24. And I want to be long the asset when the stock price is still dislocated. So AI is definitely part of the thesis here. And I think Meta, since you brought it up, Meta is a wonderful example of the actual application layer. So we're waiting for all the applications of Gen AI. They're right here. They're right in front of you, and you can see how the user interface has become a lot more personalized, bringing information and data to you and experiences from across the internet. And it's also made the advertising experience a lot more effective too. The return on ad spend for marketers on Meta is improved because of Gen AI applications, and there's going to be more coming. So these are two good ways, I think, to play Gen AI that the market really hasn't appreciated enough yet.
And Mark, Amazon at $145. If we're having this conversation next Thanksgiving, where do you think it sits?
I think we're closer to $200. I think we have like 30-40% upside. I don't know if you get back to kind of the pre-COVID multiples, because it's a very different interest rate environment now, obviously. So, but I think is there a path between kind of 13 times cash flow and 20 times cash flow where it was before? Yeah. And, it's somewhere in the middle there. And that's a couple of turns. And then you've got this growth, with this company that's kind of this was the trough year for Amazon. And 2023 was the trough year in terms of margins, revenue growth, multiple, and that just creates a lot of upside for investors. And then I know we've already had this kind of pretty nice move off the bottom, but I think there's a lot more because I think the fundamentals haven't peaked. They've got a lot of room for recovery.
Right. Before we let you go, you have a take on Microsoft, given that it reached an all-time high yesterday?
No, I don't. I don't cover Microsoft, but I just think that the broad trend of generative AI, they're not just one or two winners in this space. They're going to be several. They're going to be a couple of really big winners, and I think you can find it. You can find those winners at the application layer. Again, that's Meta infrastructure layer. I think AWS would absolutely be in consideration for that. So I just think Microsoft's done a wonderful job, and I think there's a couple of companies here, handful, maybe 10 companies that could really be good long-term investments off this theme.